Welcome to Accounting Principles Chapter 8, Discussion on Internal Controls Part 2. Part 1, we went over the initial steps in identifying any errors that needed to be reconciled or any adjustments to the bank statement cash balance as compared to the books and records cash balance. After identifying those errors, we will need to make some internal adjustments to make sure that our beginning accounting cycle will reflect the corrections made for the prior accounting cycle. As we discuss the various adjustments that would be made to your books and records as related to the bank account reconciliation, the unrecorded deposits, outstanding checks, bank service charges, debit credit memos, you will need to adjust your ledger accordingly. The text illustrates here the adjusting journal entries for collection of notes, interest earned, check printing, insufficient checks, as well as other notes payables and collectibles. Now keep in mind all reconciliation book balances are reconciliation addition book balances are debits to cash. The credit side depends on the reason for the addition. The example would be the credit interest income for interest on balance and notes receivables when you collect the bank note collected. And then all reconciliation subtraction from book balance are credits to cash. A debit depends on, again, on what you are adjusting. So a debit miscellaneous would be for the expense for the bank service charge, and accounts receivable customer subsidiary ledger for an uncollectible payment. Internal controls purposes, principles, and procedures are essentially the same across the global accounting climate. You are looking for your control of cash. You are looking to identify fraud, and additionally, you are attempting to control expenses, especially on your bank account, for fees for maintaining that bank account. The banking climate is quite competitive, and you could control costs by comparing financial institutions of where you want to transact your business. Now, our homework to support the bank reconciliation process and to test your knowledge would be exercise 811. This has a bank reconciliation exercise for the Chung Company. Items A through E are giving you some adjustments that would need to be made when comparing the bank statement to the internal books and records. And if you notice down here at the bottom, we have our check answer to make sure that once we've done our adjusting entries, that this is what we're going to arrive at. And here is the solutions to exercise 811, showing that we started out with our bank statement balance. We've adjusted for a deposit in transit, a bank error, an outstanding check, and then we've done our adjusting entries to our book balances by doing a $100 error, the service charge, I should say, and a insufficient check. So we have a reconciled bank statement to books and records of 14.8. So this is the end of part 2 of our tutorial for bank account reconciliation. I hope this gives you some guidance into how the internal control process is supported by the bank account reconciliation. It protects assets and ensures the reliability of the cash accounting operations, and it also prevents or detects possible fraudulent activity, especially when you have more than one party involved in handling the bank account. So thank you so much for your time. See you on Chapter 9.